Okay, table of contents of today. We're gonna do a demo of bank feeds. We're gonna go deep dive in bank feeds. We're gonna talk about bank rules, and I'm gonna give you a couple of tips, things that I learned along the way that enable ultra data entry, and it's gonna be awesome because this coming tax season, data entry may be our bread and butter, right? And then we'll kind of transition it to approaching zero data entry, right? That place where we want to be, and then Michelle is going to talk about how value pricing. Basically, we're trying to give you practical reasons why bank feeds enhances the bookkeeping experience, which makes you better and faster. Therefore, charging by the hour will penalize you. We don't have a presentation, we don't have an introduction slide. So my name is Hector Garcia. I'm from Miami, Florida. I teach and train QuickBooks for a living, but I'm also a, a accounting professional, just like most of you. And my passion is QuickBooks, and my passion is training, and this is why I'm here. You want to introduce yourself, Michelle?
But like Hector, I do a lot of teaching and training. My practice has totally evolved over the past 24 years to where now I focus on teaching and training because I enjoy doing things like this. A little bit about the QB Power Hour for those of you that don't know. Hector and I do this every other Thursday, and we cover topics on QuickBooks Desktop and QuickBooks Online. And then we also, a lot of times, will bring in a third-party app that relates to the information we're talking about. Or like today, we'll talk about value pricing, practice management type of topics. So I'd encourage you guys all to register. It's free. When you're attending live, you can get CPE as well. So go to qbpowerhour.com and you can join us.
Okay, so general rule. Like I said, so let's dive right straight into the topics here. I'm gonna go ahead and dock it, and Michelle's gonna handle questions. So general rule is bank feeds is faster than manual data entry. Bank feeds facilitates bank reconciliation by doing something called pre-clearing the transaction. So when you actually download something through bank feeds, it will mark it clear, which is not the same thing as reconcile. So if you actually never enter a piece of data into the register by hand, and you do everything through bank feeds, reconciliation is a one click, right? In theory, right? Because everything's going to be pre-cleared before you get into the reconciliation. Also, bank feeds can be undone, and that's kind of the real sexy part about it, that you can undo it and send it back into new transactions, and then you can figure out if you put it in the wrong place. Also, bank feeds are usually, think of bank feeds as giving you two choices, right? The choice of adding a new transaction or the choice of matching an existing transaction, right? When we deal with cash basis write-up, which is our bread and butter between January and March, right? We're doing all adding of transactions. But when we do bookkeeping, or what I call collaboration with our clients, where we're doing more of accrual and sort of monthly reconciliation, then we have to deal with a lot of matching, right? So that's a nice thing about bank feeds. It actually provides both angles. The next general rules here is there are four main functions that we want to get your head wrapped around the mechanics of bank feeds. There's four main functions. One is called add new transaction. That's just pushing a brand new transaction into the register. Okay. Creating a rule, which means you tell QuickBooks to do something for you, right? Which is different than add. Add means I have to click a button. Rule says it prepares it for you. You still have to accept it. Then there's matching. Matching is when a transaction in the register is already there, and all you're saying these are the same for the purpose of pre-clearing it, clearing it before you get to reconcile. And then finally, matching an open transaction, which is different than matching an existing transaction. Matching an open transaction is if I have an open invoice and I have a deposit, match it to that invoice. I make the receipt payment for me and make the deposit for me. Or if I don't have an open invoice and have a received payment, and that received payment was taken through undeposited funds like it's supposed to be, the matching can also grab that undeposited funds and put it into a deposit. So there's a couple of things that we're going to explore today. Now let's talk about some terminology. Direct Connect in the QuickBooks Desktop world, it's a service that you pay the bank, right? You pay the bank $10 to $15 a month for the banking side. Most credit cards actually don't charge for it. American Express has never charged for it. Direct Connect is limited to what the bank can give you. So you really don't have much control about what comes in the bank, right? Now there's, in QuickBooks Online, in the online world, there's something called Web Connect Express, right? Which is sort of a hybrid of manual Web Connect and Direct Connect. So in the QuickBooks Online world, there isn't Direct Connect. There is no way to get certain capabilities that you can with desktop. For example, in QuickBooks Desktop, you can do bill pay. That means you can generate a check and tell the bank through QuickBooks Desktop, tell the bank, go ahead and issue a check in my behalf, sort of like a mini bill.com, right? In QBO, we don't have that. It doesn't seem in the short term that that's going to happen. So you cannot generate bill payments from QuickBooks Online the same way you could do QuickBooks Desktop because it's not Direct Connect. So because of that, you don't have the exact same capabilities as Desktop. Now, I'll give you a tip that it seems like a duh, but you may go back and go, oh, yeah, that's right. If you have a client in QBO, they should not be paying the bank for QuickBooks connection, right? I have a lot of clients are that, oh, QuickBooks, I want to pay that $10 a month, and they connect it to QBO, and they think those two things are together. If the bank is charging you the QuickBooks fee, you know what I'm talking about, right? The QuickBooks fee, that's not for QBO. That's only for desktop. So stop paying that because that's doing nothing. Oh, you're throwing money out the door, but that's a different story, right? Now, Web Connect, right? This was introduced in the QuickBooks Desktop world. Web Connect is when the bank generates a digital file. It's almost like a spreadsheet, a digital file that you can manually upload. Now, what I really like about Web Connect is we don't have the 90-day limitation that we have with QBO. So if you're frustrated about QBO only being able to give you 90 days, right? Don't do the connection through Web Connect Express. Download the manual QBO and upload it, right? And we'll try to talk about that. Now, there's no date limits or capacity limits on desktop. So you can actually have a Web Connect file in desktop that's 3 or 4 or 5 years, 8,000 transactions, and there's no limit. In QuickBooks Online, it's best practice that if you're going to manually upload a QBO file, do it in chunks that is no more than 1,000 transactions, right? Over 1,000 transactions, it doesn't behave that well. Now, it can import, but I recommend to try to do it in 1,000 transaction batches, right? And I think at some point that recommendation would go away because the systems would get so good. When you do a manual upload of a CSV file, you actually have a hard limit at 1,000. So you don't in QBO, you don't have it on a QBO file, but you do have it on a CSV file. So for QuickBooks Online, the recommendation is the following. Okay, typical scenario is February 3rd, we get a new client. We need to catch them up for the entire 2015 and also get them ongoing for the year. So it should be a two-step process. One, manually download the entire year as a Web Connect and upload that. Finish that, then connect the Web Connect Express on top of it and limit it to whatever time frame is so you don't get any information from 2015, right? That's best practice for this coming tax season. All right, so every bank is going to have a different screen. In Chase, which is the bank that I use, when you actually click on download transactions, it gives you the two choices. It says direct connect, right? And you see that it's activated there. That is for my QuickBooks desktop file. Matter of fact, this is connected to my QuickBooks desktop file. But in the case of Chase, for example, they say, no, download is free. We're going to do a manual download. Not every bank actually takes you to that screen that says choose whether the free one or not. But like Bank of America, it takes you straight to it. So usually when you then go to the next screen, which is the actual manual QBO file download, that's when you actually get to choose the date range. Most banks are striving towards giving 24 months worth of data. Not all the banks do it, right? So one of the interesting things about it is, as accountants, we try not to give recommendations about what bank to use. I think for the most part, we try to stay away from that. But if we want to increase our workflow, we should probably recommend clients to move to the banks that have better bank feeds. There are banks with crappy bank feeds and there's banks with good bank feeds, right? So if it costs your client $20 more in fees or whatever to go to let's call it a better bank, right? Consider maybe lowering your fee by $20. You'll get it back multiplied. Okay, so encouraging your client to use a bank that you have success with bank feeds, it's another interesting practice. Oh, if you ever recommend a client to switch banks, make sure they don't close the other bank account until we're done reconciling and getting the documents, right? Because that's the other major challenge with closing a bank account, that you don't have access to the documents anymore, right? Okay, so what if my bank doesn't allow me for a QBO file? This happens. Sometimes the bank does not give you the QBO file, right? There are third-party tools out there that can actually take a PDF file and convert that to a CSV or convert that to a .qbo file. Okay, I've actually, if you follow what I write in the webinars, I talk about that tool a lot because it's one of my favorite tools. And if you have access to the QBO file, then just do the manual upload. All right, so let's jump in and do a demo. The manual upload process works like this. Okay, there's a little button here called File Upload, right? And then we'll click on that. And usually there's either a CSV file or a QBO file we downloaded from the bank, right? This is for the manual piece, right? Not the Express Connect. This is the one that we manually downloaded. and we're going to go ahead and click on browse, and that's somewhere in my desktop. I think it's in my downloads folder. Actually, I created a folder here called bank feeds, right? So I actually downloaded the CSV file and the QBO file because I want to kind of show them to you. So if you can upload QBO file, .QBO file, Web Connect, that's a better choice than CSV right now. Unfortunately, the CSV import can only bring 3 columns, which is date, payee, and amount. But the QBO file can bring 5 columns, which is date, reference number, payee, memo, and amount, right? So reference number is extremely important for matching checks. So through a CSV upload, we can't match checks the same way that we do it through a QBO file. So that's sort of best practice. If you have the QBO file, best possible solution. Okay, so we select the file, right? And then we click next. And basically, depending on how long it takes, it'll take you through a screen and it'll say, look, double check that your bank account is correct. Double check that it's the correct account that is being linked, right? To make sure that you connect the right account. Now, one thing to know about this particular process, once you connect the QBO file once, right? The second, third, fourth time, the account number, it's sort of hidden and matched. So you don't have to actually choose the bank account a second time. And then you click next. And then what happens is, and I kind of did this before we came, then basically all the transactions come in this screen. So let me give you a couple of best practices on how to best approach this screen. Number one, when real estate in data entry is key, right? And distractions are our worst enemy. So we want to take away everything away from the screen that could potentially distract us. To me, oh, to me, this bar here on the left side, to me, is distracting. So what I do is I collapse it, right? So that's a little QuickBooks Lab option where you can have the collapsible left bar. Definitely collapse that, right? So that gives me a little bit more real estate. The other thing that I do is up here, right, where the banks are, usually the ribbon looks like this, right? And it shows you every single bank and every single credit card that's connected. We don't need that, right? So we're going to also click on that and collapse that as well, right? You can also, let me dock this. You can also do the bank switching from here, so you don't need those big icons taking 25% of the screen. The other thing that I like to do is here on the gear box, right? Here on the baby gear or settings box, I click on that and then I click on compact, because if I have it uncompacted, yeah, I get that nice, double space. We're accountants, we don't care about spaces, right? So we're gonna click on compact, give us a little bit more, real estate, and also rows, right? So I usually like to have as many as possible on the screen so I can start seeing what transactions I want to prioritize around. However, it's actually kind of good to have less rows. Actually, I wish somebody from Intuit was in the room and would listen, that it would be nice to have 25 rows, because sometimes the more rows you take away, the easier it's for you to do a select all and exclude a few, right? So I really wish we had a 25 option, because that would actually make things pretty interesting. Hopefully, I'll be able to demonstrate that here. The other thing that I really, really like, actually, this is probably one of the most powerful. It looks small, but it's huge. It's this little option here. Let me click on that. A little option here that says copy bank detail to memo. You have no idea how much that has transformed the way I function. Because what happens is the specific data that comes through the bank, in my opinion, is sacred, right? When our clients choose a payee and they do random stuff like our clients do, right? On the 8th day, God created clients, you shall do random things in QuickBooks. You know that rule, right? Right. So when they do random things, then our job is to unrandomize it, right? The problem is that if they actually override that payee, we don't know what it really was supposed to be. So having that option checked in there will also bring the raw data from the bank in the memo. That way, if you're reclassifying transactions or something, you can actually realize what was done wrong. So let's talk about actually doing the data entry.
Is that copy the memo to the bank, copy the detail to the bank memo available on desktop?
No, that's a good point, right? So that option is not available. Now, however, I make it available, because when I do data entry through QuickBooks Desktop, I don't download the QBO file. I personally always download the CSV file, and I duplicate the columns, and then I convert them to QBO file, and then I bring them to desktop. That may be a topic for a different webinar. So one of the things that I like to do is I like to see progress, right? So when I do bank feeds, I like to focus on the the most amount of transactions first. That way, that stress from 947 numbers staring at me at the face, it starts going away faster. So one of the things I normally do is I go here to the description, I'll click on description, and that's going to resort all my vendor names. Let's call it vendor names, and then I can take a whole bunch that are common, like ATM deposit, right? And I'm going to go ahead and select ATM deposit. And for now, so I'll give you another best practice. Okay, one of the things that I normally do is if I have access to the CSV file, I'll basically go in and take only the deposits and send a spreadsheet to my client and tell my client only tell me which deposit is not income, right? That way, by default, everything else is income, and we can kind of speed ways through. That way, the client has a spreadsheet, has a raw data. They don't have to go through bank statements. You don't have to send an email saying, "Is the deposit for $5,000 on January 2nd?" We don't have to go through that specific inquiry. Just send them a spreadsheet of all the deposits and say which one of these are not income. Right. So, for example, I'm going to go ahead and put here ATM deposit, and I actually do create customers. Right. So again, let me put my tax season, cash basis data entry for the whole year hat, right? This is not the collaboration monthly bookkeeping. This is a whole bunch of data entry hat. So I like to create a vendor that mimics that, because if I pull a report of deposits and I give the client a report of deposits and I say, look, this much was ATM deposit, this much was EFT deposits, this much was a check counter credit. So sometimes that gives you some context. All right, so I'm going to go ahead and click add and create a customer. Now, the normal thing is that a deposit is a customer. However, I'm sort of used to making them a vendor, because in QuickBooks Desktop, bank rules only work with vendors. They don't work with customers really well. So if you want deposits to behave like expenses, you want to make sure that your income components have vendors attached to it. I know it's kind of weird, right? But that's kind of the rule of thumb. So I'm going to create them as vendor, because that's just kind of my practice. Again, ATM deposit is not a real customer. That's why I'm creating it as a vendor. Okay. And this is the memo part that I love. I mean, this is wonderful, isn't it? Right? To have actually the raw data from the bank. So I'm going to go ahead and click on add. Okay. And then what happens is QuickBooks automatically assumes that because all these other things called ATM deposit are the same, that it should all code them the same. Now, you see how description here says ATM deposit? That's actually not the raw information, how it came through the bank. That is Intuit doing sort of an interpretation for you. So here on the gearbox, there's a little box that says show bank details. That gives you the bank's version of the data on this screen, right? Because to me, sometimes it's frustrating that Intuit does some of the filtering for me and clean up that information for me. Sometimes that cleanup is not 100%. So I'm going to click on show bank details. And basically, instead of seeing the raw bank data, I'm actually going to get the full bank data, right? Sometimes that context is good. Sometimes that context is bad. I actually love, thank you Intuit for giving me the capacity to choose which one I want. Okay. So now I see 32 transactions recognized. So I'm going to go ahead and click on that. And now those 32 transactions are not in my register yet, okay? But because they're in the recognized bucket, and this is the power of being able to control the amount of rows, because if I had recognized 100 or 200, maybe I don't want to just say yes to all of them. Maybe I want to kind of eyeball them first. But assuming these are all good, yeah, so assuming these are all good, I'm going to go ahead and click on the little select all box under batch actions, and then I'll click on batch actions here, and then I click on accept. Now, once you become sort of a pro in bank feeds, you don't accept every time. Like you don't accept and then go back, accept. I'm doing it just because I like to see progress. Okay. To me, right, going from whatever that big number is to a smaller and a smaller number, that's why I like to focus on the big common transactions first and then go down from there. Okay. All right, so let's talk about some expenses. Okay, so let me come down here. I'm going to go ahead and click on the gearbox and switch back to the, let's call it the filter mode of the payees, right? And then I'm going to go and take a look at a common expense here, right? So I have right here, Best Buy. Okay, so there's something that most people don't know. This may be new for some of you. I can actually grab, so without having to go through the bank rule system, I can actually click the first transaction. I can hold shift on the keyboard and go down and click the last Best Buy, right? It will select all of them in group for me, okay? And then I'm going to scroll up here and then I'm going to click on batch actions and I'm going to click modify selected, right? It's not intuitive because you really don't, that doesn't actually spell out what I'm about to do, right? Because I'm not really modifying it, I'm adding it, but this maybe should be called batch add or something like that. Not sure what the right terminology is. Anyway, so I click on modify selected, and then I can put my vendor Best Buy, right? and then I'll put here, let's say office supplies, office expenses, and click apply. And that basically saved me the step of creating one, waiting for the recognition, and then accepting, right? So sometimes that dynamic is also interesting, right? So again, there's no right or wrong way to doing it. I want to make sure that every single option in there is something that's available to you and that you understand how it works. Let's talk about matching. I think I only got about 2 minutes, so give me a little bit for matching. So let's talk about matching, okay? So for example, I'm going to click on received here, and let me wait for that to sort. So I have here a deposit for 7,699.38. You see it there, right? Very clear. So let's say that I have an invoice already created. So I'm going to go ahead and create an invoice, and I'll just kind of copy that amount. So bear with me. I'm going to create an invoice real quick. So I'll have here a test customer, and I'll pick whatever item here, delivery. And then I'm going to go ahead and paste the rate in there, right? Whoops. That didn't go according as planned, but that's okay. So anybody remember that amount? That was a weird amount, wasn't it? All right, let me hit escape again and see what the amount was. Okay, there it is. What I'll do, right, just in case, because I have a lot of distractions with the pop-ups. Give me 1 second. Let me go ahead and select that dollar amount. I'm going to paste it up here real quick. Yep, it pastes. Right? So sometimes you have to test that the paste is working. You kidding me? All right, so I'll go ahead and click on invoice, and then I'm going to again attempt to do this, right? So I'm going to create the invoice, select whatever part, select the rate, and then I'll take away the dollar sign here and then do a save and close. Now, so what happens is the way bank feeds works, it would actually, because the invoice is still open, it won't recognize it for you, at least not yet. But if I actually click on the transaction and I click on find match up here, and this was a very nice improvement over the desktop bank feeds. If I click on batch here, and then I'm gonna kind of do a date range thing here because I wasn't 100% sure. Okay, so now I can actually sort and search through my open transactions. And in this particular case, it was an open invoice. So I could just click on that open invoice there. I can just click on it, and then I click on save. Now, if you have a client with an $8,000 invoice and a 7,699.38 deposit, and the difference, it's a credit card fee. Is that common? Does that happen to anyone? Okay. Then you click here where it says resolve difference, right? And then you click add new transaction, and you can set up the difference there, right? So then in here you can put, let's say bank service charge, right? And then you can put whatever the difference is. So if it was a $20 difference, I would put negative $20, and that will get me closer to the calculation to get there. So that's kind of a hidden feature that's there that enhances on the matching. I think Michelle is putting pressure on me to finish my part.
Well, actually, I just want to add a few things on there. People are asking about bank rules, and you can set those bank rules to really automate a lot of the process. And we have a lot of people who attend our webinars from Canada and elsewhere, and they were asking about the sales tax piece because they have to break out GST and HST. In Canada, when you set up a bank rule, or in some of the other countries, you can specify how much the sales tax is because they have to break that out on every purchase. And there's also a third-party app called Receipt Bank that will actually, you can take a picture of your receipt, it reads the payee name, the date, the amount, and the sales tax, and breaks all that out. So I highly encourage you, if you're in the other countries, look at Receipt Bank.
Right. I would like 2 more minutes to do a bank rule. Okay. All right. Thank you.
I want my time too.
Okay, so you see these ones are called BMW Financial whatever, right? So I can actually preset these, and this is very hidden, right? It's right here under File Upload, and I'll click on Manage Rules. Okay, so I'll go ahead and click on Manage Rules, and then I'm going to create a new rule, and I'm going to say, look, if it contains BMW, it's probably BMW, so go ahead and give it a category. So I'm going to call this bank rule BMW. By the way, the rule name doesn't matter, right? So this piece here, it doesn't matter. That's just a reference point, okay? What matters is this piece, bank text. So what you're saying, if it contains the word BMW, right? If it contains the word BMW, go ahead and put it in this category. Now, I have a client that pays BMW Financial and pays BMW of Pembroke Pines, which is a local dealership, for service. Now, the problem is that if I do a bank rule that I say, look, if it contains BMW, the QuickBooks is gonna mix both service and car payment, right, potentially into the same. So this is where you can actually say, look, if it contains BMW, right, but in this case, does not contain the word, let's say, service, right? Because this was called BMW service. This rule is only going to grab some BMW transactions because I can actually control the way that piece works, right? So then I'm going to say, look, make this an expense, and we'll put the pay here BMW. And then at the very end, the category, let's say it's auto expense or something like that. I may have to create it on the fly. So I go ahead and create that on the fly there. Okay. And then I go to save. And then what happens is once the rule is created, then I'm going to go ahead and go back to my bank feeds. All right. So I'll go back to my bank feeds here. And no longer that transaction is going to sit there under the new, is going to be on the recognized, and now it's ready to be entered, right? So that's why it says rule. Rule means QuickBooks took an explicit set of instructions to create the transaction for you. So I'm going to go ahead and select all of them, do a batch action, and click on accept. Now I wish I had 10 more minutes, but I don't. So
Anyway, that's why we are moving away from hourly billing. Is that better? Okay, thank you. Because of the downloaded transactions and other automation features, we're able to do the recurring transactions. Also, then when it comes to document and receipt management. All right, so anyway, document and receipt management. I mentioned earlier Receipt Bank, where you can pull things in. Well, even better is something called HubDoc, because now it will also pull in your bank statements for you. You don't have to log in to all of the client bank accounts, download the statement, and look at it. It will pull that down for you. It will fetch those bank statements automatically for you. So we're really saving a lot of times because of all these different things. So we're doing data management now. Like Hector showed you, you're managing that data, you're setting the rules, you're reviewing things, making sure everything looks okay. We can't keep charging hourly. That's why everybody's wanting to move to value pricing. And I know a lot of you have heard a lot about value pricing, right? Have you guys attended some of the sessions here, ed class, things like that? Let's get away from the theory. We get that we should do this. How? How do I start doing that? So that's what I wanted to focus on today, was the how do we start doing that. So first of all, which clients are you going to start with? Pick 3 easy ones. Don't pick hard clients to start with, right? Pick some easy clients. Look for a client that you're doing regular services for them. You know, things, maybe a client that you've had for a year or so. Now, new clients, it's a little bit easier because you don't have to convert them. But existing clients is what I'm talking about here. A client that you've been doing maybe for the past year or two, it's pretty regular, the work that you're doing for them. And then you could go through and find clients that are good candidates for QuickBooks Online, because it really is where we're getting a lot of this automation and streamlining as opposed to the desktop. It's really allowing you to add the value in there for your clients. Not complex transactions. Get ones that don't have like lots of inventory. I mean, you think about it, a lot of expenses that might just go to office supplies or job materials, as opposed to inventory with multiple lines on that transaction. Get a client that separates business and personal, because that's going to make it easier for you. So you'll want to pick 3 easy clients to get started with, and hopefully one that you have a good relationship with, because you want to talk to your clients about, look, this is what we're doing, this is how we're going to change things, and this is how the new pricing will be and stuff. So hopefully it's a client that you have a good relationship with. And remember, once you get started with this, you're going to reevaluate like every 3 months. So I've had some people say, but what if I get it wrong? That's why you reevaluate, because you will make mistakes. So you do kind of have to kind of ease into it. So you're going to reevaluate quarterly when you're first getting started. At a minimum, you always want to reevaluate on an annual basis because things change. And use a phased approach. Start with maybe just 3 clients to begin with. See how that goes. See how things are working. Monitor things. And then you can do another batch of clients, maybe 5 to 10 clients the next time. So work it in phases. It's not like January 1, all my clients are going to be different. You know, do a phased approach to that. That's going to make it easier for you. So I also hear accountants say, but Michelle, if it was taking me 10, 20 hours and now it's taking me 4 or 5 hours, I feel guilty for charging them the same amount. Let's add value, okay? Because we're saving lots of time. Let's add value for the client. So what are some ways to do that? It is so easy to create a budget in QuickBooks, especially in QuickBooks Online, because you can pull the current, your actual. It can take you 5 minutes or less to just pull the budget based on last year actual. And that will be beneficial to the client, because then you can show them their budget versus actual. Maybe then they want to get more in depth on budgeting, and you can take it to the next level instead of just pulling the current year numbers. But you can create a budget, very quick and easy for the clients. Then the automated reports. Set up reports, especially with QuickBooks Online. You can automatically email that report to them. Let's say you want your client to get the financials every month. You can have it automatically email them. You do nothing. Better yet, what about that client that doesn't follow up on invoices? Send them the collections report every Tuesday or every Wednesday. Takes you 2 or 3 minutes to set it up. Then it will automatically be emailed. You do nothing. And best of all, it usually goes in the middle of the night. And your client's like, wow, you sent me that at 3 in the morning? You're like, yeah, I'm working hard for you. But anyway, so it automatically will email those reports. It goes straight to their phone, so they don't have to log into QuickBooks at all. They're getting that email report in their phone. So things like the collections report, sales reports, financials, that's something, again, that just takes a few minutes, but it's adding value to the client. Customizing reports. Give them a monthly P&L. Maybe they want a 3-year or a 5-year balance sheet. Create a custom report for them. It's quick and easy. You click the little box and share it with all the users. Or you again can set these things up to automatically email. And now, have you guys used the management reports in QuickBooks Online? They're nice, pretty, very professional looking management reports that you can use. So these are all some ways for us to add value, little or no time and effort on your part. Okay, but yet to the client, that's valuable information. Also then consider adding in some support or training. You don't want your clients afraid to call you. How many of you are afraid to call a lawyer? Why don't we want to pick up the phone and call a lawyer? They're going to charge you, right? The clock starts ticking. So I see all kinds of small business owners going out to the Intuit Community Forum or to LinkedIn or elsewhere. My accountant told me to do X, Y, and Z. What do I do? And I'm like, well, why don't you ask your accountant? They'll charge me. You don't want your clients afraid to charge you. If we're the trusted advisor, the client should pick up the phone and give us a call when they have questions, right? Consider building some kind of support into your packages. And we're going to talk more about support and training because both of those are big things that we can do, which actually we're not supposed to call it training anymore. We're supposed to call it education. Did anybody go to Ed Class's session yesterday? Okay, so for those of you on the webinar that didn't, Ed Kless says you don't want to call it training, you call it education. And the reason for that is, do you want your 15-year-old daughter to have sex training or sex education? It really makes you think about that. Okay, so we're going to start calling it education. So let's talk another way to add value, and we'll talk more about the support and training in just a minute. But another way to add value is with reporting apps and dashboards. This is just one example of a third-party app that you can use that could add a lot of value to your client. There's lots of them out there, but this would help them monitor their KPIs, their key performance indicators. A lot of our clients don't want to see the P&L and the balance sheet. They don't want to see a bunch of numbers. They want to see pictures. So with a lot of these dashboards, it's very graphical, where you can see the images. You can see red as something that's an alert, you should pay attention to it, or green. So adding some kind of third-party app in there, again, you're adding value, and we'll talk more about this in just a minute, but it's an easy way to add value for those clients. Other ways to do that is accessibility to QuickBooks. This is value for the client. Being able to access their information at any time. If you're doing everything in QuickBooks Desktop, they can't log in and see, unless you're hosting it, they can't log in and see details on customers or things like that. With QBO, they can log in at any time to see things. They can enter things on their mobile device. Teach them to take a picture of that receipt when they go and get gas or job supplies or whatever. Teach them to take a picture of that, and it will automatically put that attachment with QBO. So those are ways that you can add value. You're downloading transactions, so you're not months behind anymore. It's up to the date. It's up-to-date information. We're not behind on our information. Sometimes if you've got a firm, you might have 5 people in there, and maybe whoever has time works on whichever client, but maybe the client wants a specific staff person. Maybe I love working with Hector, so I don't want to get anybody else. I want Hector to do all my work. That's value for the client. And we've got to let the clients choose what they value. Okay, think about it. If you go on a plane, you pick your seat based on what you value, right? Do you want the first class economy comfort? Do you want a preferred seat with an exit row? They're letting you choose what you value and what you want to pay for. Same thing with cruise ships. You choose what you value and what you're willing to pay for. We need to let our clients tell us what they value. A good example of this, several years ago, it's probably 10 years ago, I had a client and I had trained the bookkeeper on how to do all the stuff for a construction company. We'd spent a couple days together going through how to do all the job costing and all the details. And I was like, okay, we'll see you. I'm out of town next week. We're going on a ski trip for spring break. And the owner was like, oh my God, you can't leave. What if she has questions? You've got to be available. I said, dude, I'm taking a ski trip. Sorry. It's vacation. He's like, well, can't you be on call or something? It's like, I had never thought about that. He's like, doctors do it. I think you should too. I'm like, well, what would you pay me? He said like $1,000 over and above my normal rate. I was like, when you're skiing, I get tired, can't keep up with the kids. I get cold. I need a break. Okay, I can go in and make a call back. She only called me a couple of times, but he wanted to know that I was available when she needed. Just like you buy insurance, it's there when you need it. We need to look at what the clients value, and if it's support, we're there valuing it for them. We need to also consider the satisfaction guaranteed. You do it anyway. If a client calls you, and let's say Hector calls, and Hector's like, Michelle, you told me I'd have it by this date, and I'm upset because you were late, and blah, blah, blah. Well, I want to keep my client happy, so I might say, okay, well, we'll take off $200 this month or whatever. You kind of guarantee their satisfaction anyway. Put it in writing. Let them know. That's worth a premium on your pricing because that's value that we're adding. Guaranteed delivery time. Lots of accounting professionals now, especially those that do tax, will change their rates during busy season. If you get us the information by the end of January, your tax return might be $500. If we get it by the end of February, it might be $600-700. If you get it to us by March 15th, it might be $1,000. So you get us stuff late, you pay more. We should do that as well. If you need stuff from the clients, you have a set due date, and there's consequences when they don't do that, okay? So we need XYZ by the 10th day of the month. If you are late, it's going to be an extra $25 or $50 if it's a week late, and then keep going up from there. We don't need to be dealing with our clients' procrastination. So build it into your pricing, okay? Then also, a lot of accountants now are including QuickBooks Online. Hey, client who's still using QuickBooks 2002, good news. You don't have to go buy QuickBooks. We're going to include QuickBooks for you, and better yet, it's always up to date. So that's very valuable to the client. And other apps, like if you're using Finagraph or something like that, use those apps to help add value, and it's little or no cost, okay? QBO Plus, our wholesale pricing is $15 to get the bank feeds, to download the transactions, to automate the reports. Think of how much time that saves you. So it's a no-brainer to do some of that. Then, again, consider having a separate a la carte option or include it in your prices for support and training. Let's look at some of those too. In detail. So on education options, you might say to the client, okay, if we're setting you up on QuickBooks Online, we will do the conversion from desktop, the customization of QBO, plus give you, let's say, 4 hours of training. 4 hours of education out there. You can go in, teach them some of these things using remote access, maybe GoToMeeting, TeamViewer, whatever you're using, record the session. Okay, so you might set up 4 one-hour sessions with a client, record it. You're adding value because then they have access to the recordings, and you can give them access to those handouts that you get from the ProAdvisor website. So again, you're adding value to the client, giving them resources that they can refer back to later. So you might consider bundling it in with some other packages, or it could be a separate deal. If they're already using QBO, you might have a separate a la carte option for some education. Did you have a question?
Oh yeah, there was a question from the crowd.
Okay.
Not from the other crowd.
Okay.
So somebody's saying if you do work faster and you deliver work within a day or within 2 days, the perception of your cost and value goes down. That's what they're saying. Therefore, it makes it harder to charge more. So what do you take on that?
Okay, so if I'm automating everything, I'm getting it done for them faster. They should be happy that they're getting it quickly. And they just value the end results. I mean, if you're worried about it and you get it done Tuesday, don't tell them till Friday. They probably aren't logging in and looking at it either. But it's not about how long it takes us to do things. It's about the value we're providing. You're still providing the monthly financials to them along with other things, so they're getting the same value. And a lot of times I think we get hung up in our head. about things that the client doesn't really think. So that's something to keep in mind as well. So another thing to consider is adding that support option in there so the clients aren't afraid to call you. Consider anything you do includes maybe a basic support. Maybe we'll reply to your email in 24 hours. And I've had people say, but won't the client abuse that? No, most of them don't. Okay, now you can expect a new client is going to take more time the first couple of months while you're educating them and training them on what they need to do. But then after a while, they should have a handle on what they need to do. But let's say they want to decide maybe they need a bank loan, maybe they need to do a lease versus buy. You want them contacting you for that support, and that would be an add-on or a change order. So with your basic services, though, include basic support. Then you can have different levels so that they can choose. Like, let's say Hector really wants my support. He doesn't want to wait 24 hours. So maybe you have the basic level, then you have a mid-level, and then the top level. Let them choose. And so the top level might be phone call support, and we'll return your call within 4 hours. Okay, so consider putting support into your services. Your clients really, really value that. They don't want to call into it and get somebody that sometimes there's a language barrier, sometimes there's a knowledge barrier that the support people don't understand what they're asking, don't understand my business, whatever. They want to know that you're there for them. So that's very valuable to your clients. So, and again, you can see I put a few little things on there, give you a couple examples. But let's talk about how are we actually going to start doing this now. We're going to start by setting up our packages. We're going to sell products. This is our package. All right, so you're going to have options for the client to let them choose what they value and what they want. Then go through, you got to determine the pricing, implement it in phases, evaluate and revise always. You're going to always be looking at things. Okay, so the question was, QBO does not have price levels like the desktop does. Is there any way around that? You can set up multiple items, and depending on your need, you may need to get a third-party app. But remember, QBO is being updated every month. So it may be it's there next month, it may be it's there in 6 months. And that's where, too, when you're looking at clients to convert, you want to choose the clients that are a good fit for QuickBooks Online. And maybe by 6 months or a year from now, they may have price levels in there. So you got to keep monitoring that. But good question. So we need to have at least 3 choices, okay? You've got to have 3 choices for your clients. This is proven, lots of research. You will maximize profitability if you have 3 choices. Most of the time, they're going to pick the middle one, okay? So that's what you're going to do first. You're going to say, hey, Julie, here's the options for you, and I think Julie needs this most of the time. This is what I think she really needs. Then Julie might be on a budget because times are hard, so I will take away a few things. And then for the premium package, you're going to add some more things in there. So you're giving them 3 different choices. Okay, so for example, this is just very basic. You know, with the basic package, you're doing the monthly bank recs and email support. You're putting that support in there. Then the gold package, maybe you're also doing the accounts payable management. Maybe it's a restaurant with lots of invoices and you're going to use bill.com to automate that process. Then the premium or the platinum package might include receivables management and stuff. So you always have to have 3 options, all right? At minimum, you need to have 3 options. Here's an example of one that Laura had put together. On this one, you can see we've got reconcile and close based on the number of transactions or the number of accounts. Okay, because the more accounts you have, the more activity you have. And that's where you need to evaluate your clients. Do they have 25 transactions a month, 250 transactions, or 2,000 transactions? So this is where you have to customize it for different clients. You can see here too, she's included a controller call. That's some of that support that's there. And you get a call with us every month where we talk about your business and how things are going. Here's an example that came out of Ron Baker's book, Implementing Value Pricing. Notice this little note down here on the bottom. If all of a sudden you need a bank loan, that's not in our normal scope of work and services. That's a change order. This is how much it'll be. So those are things that come up as you go along because you have to watch for scope creep. Okay, you got to watch out for doing more work than is included in your normal package and your normal pricing. So as you go along and you get some of these packages set up, then you have to review the fees. You got to determine what are you going to charge. Review the fees. If it's a current client, what did you charge them over the past 12 months? What did you charge them for all the monthly bookkeeping and the payroll and the sales tax returns? What were the total fees for the month? And we're going to look at an example here in just a second. Look at the average billing rate survey. This year, we did include different kind of fixed fee, value price questions. Those are out there. If you Google Intuit average billing rate survey, I've got some on my website. There's some on the accountant blog, but check that out. And also watch, because I'm going to have another one coming out in a couple of weeks with more details on the results of that survey. But then you're going to have to determine the price level, and you've got a basic price level with a little asterisk. You got to have the fine print on there. This is, prices starting at X, Y, and Z, but we need to see, how many transactions you have. Are you keeping business and personal separate? Are they easy transactions, just one line? Are they multiple lines of transactions? You got to kind of analyze that client. So especially if you decide to publish them on your website, include the asterisk, say prices starting at. That way you don't lock yourself into it. So let's say we've got a stable client. You've been doing work for them for the past couple of years. We currently charge them $12,000 a year because it's a nice, easy number to say it's $1,000 a month. Okay, that's what we're doing currently. Now we're going to convert them to QuickBooks Online. Plus, we're going to use a third-party app. Maybe you're going to use like Bill.com, or you're going to use Finagraph or one of the reporting apps or dashboards. And it's going to save us about 7 hours a month. So 70% less time to do this client. So if we were charging them $1,000 a month, do you want to charge them $300 a month now? No. So that's where you go through and you say, what am I adding value for the client? And what kind of premium is that? Right. And so the question was, if you're doing support or training options, like on the training, I said we're going to provide you 4 hours of training. Maybe what you want to change it to is we're going to provide you 4 sessions, because sometimes it doesn't even take a full hour, but 4 sessions to cover maybe the setup and the lists and the getting started stuff. One for money in, the sales and receivable, one for money out, one for reporting and other things. So you might change it to 4 sessions. That way, you're not dealing with how long it takes you to do that. That's a good one.
A quick tip, best practice. Whenever I sell my time, physical presence, be at the office time, I don't quote hours anymore. I quote full day, half day, right? And then when they say, well, how many hours is half day? I say 9 to lunch, right? And then what about the afternoon? That's 2 until we get done. And then what happens is, if you give them a number, let's say 500 half day, it's complicated for the client to break it down into hourly, and then it takes away the hourly fee conversation.
Very good. Very good. Okay, so we've got that client that we're doing $12,000 a year, $1,000 a month. It's going to go from 10 hours to 3 hours. Here's the example of adding value and a premium that you can charge on the pricing. Let's say the accessibility, being able to access QuickBooks Online anytime, anywhere, any device. Maybe that's a 10% premium. Automated and custom reports that you can do for them. We're going to send you the collections report, the weekly sales report, this, that, and the other. Maybe that's worth a 20% value or premium for the client. So over $1,000, we might have $200 premium for those automated and custom reports. Satisfaction guarantee, that's worth something to people. They like to know that if they're unhappy, you're going to deal with it. So that might be a 10% premium. Then if you've got QuickBooks Online and let's say a third-party app that's $10 a month, that's another $25 a month, but it's very valuable to the client because they're getting QuickBooks without buying it, and it's always up to date and things like that. And then you might have your basic support in there. And again, that support, they could choose the premium level instead of the basic level. So all of that, if you add it together, it comes up to $1,525. You could put additional things in there, like additional support options or training or education or whatever. But let's say, though, we say to the client, here's what we're going to do. We're going to convert you from desktop. We're going to start doing this. And by the way, with the new Windows app that's available for QuickBooks Online, it looks and feels more like desktop. So that conversion and transition is easier for them. So we've been doing this for you for $1,000 a month in the past. And now we're going to charge you XYZ. We're providing $1,500 worth of value. We're going to charge you whatever. Maybe you say we're going to keep charging you $1,000 a month, plus you're getting these other things. The client's getting a good deal. You're doing it in 3 hours instead of 10. You now have more time for other clients or for family or vacations or whatever it is you want to do. It gets you away from hourly billing. The client is happy because they're getting additional services and additional value. You're happy because you're more profitable. It's a win for both of you. It's a win-win. Does that make sense?
And I do want to add a quick best practice. 9 times out of 10, when you're getting a client that had a different accountant or bookkeeper before, they didn't do value pricing, right? So you are the first one. You're the guinea pig. So you can't lead with value pricing. You have to lead with a value conversation, right? You have to ask, what about the other accounting firm you didn't like? I'm telling you, they'll always say they didn't answer my phone. They didn't do things on time. They didn't give me advice. Watch out for those clues and to say, look, for me to give you a better service that includes answering the phone, proactive advice, and response time, I have to build that into my fees. And then when that conversation starts like that, the client is more lenient towards that large because you typically it's going to be a larger fee.
Right.
Right. So have the conversation about value. What's valuable to you, and what didn't you like about the other guy or the other gal, and say, you know what, I'll take care of that. But just so you know, the reason why they didn't do it is probably because they didn't charge you for it.
Right.
Right? You think questions now? Or?
Well, and then another thing that I wanted to point out, and I just forgot what it was. Okay, take a question. I'll think about it in a minute. Yes, ma'am. So the question was, if you're doing value pricing, are you going to do it the same for everybody, or are you going to do it different for different clients? Once you kind of have in your mind what your basic packages are, then you customize it for different clients and different needs, because some clients have inventory, some clients need job costing, some clients don't have that many transactions, so it's kind of up to you. But one of the things that we need to keep in mind, but Michelle, if I raise my prices, Michelle, if I change this, I'm going to lose clients. That's okay.
That's good.
You want to get rid of some of the bad clients. If they don't value what you're doing, don't beat yourself up trying to keep them. Go get clients that do value. And I know when you're new and just starting out, you'll take any clients and you'll put up with a lot. Once you start filling up where you've got plenty of clients, fire some of them. Let them go. That way you can get better clients and focus on that as opposed to dealing with it. The PETA clients. You guys know what a PETA client is? Pain, yes, pain in the backside.
Just so you know, every airline always reserves 2 seats. For the last minute, I need to travel now, I'll pay $3,000 for that seat, right? We need to open that capacity for that golden goose that comes along, okay? Taking more clients for the sake of more clients is the bad approach, right? Get rid of clients and open capacity because the good ones will come. Right.
Yep. And last thing is, it's critical now that you have an engagement letter or a fixed price agreement is what it's called in Ron Baker's book. You have to clearly identify exactly what services are included, what's not included. Like if we're doing your taxes and you get audited, audit representation is not included unless you want to put that in there as a value add. Most of them don't get audited. But you've got to make sure that you put all those details in that engagement letter with the client and reevaluate on a regular basis. The client might be growing and they're getting more and more transactions. They opened a second location. You've got to increase your fees, your prices. If the client shuts a location down, you may need to put your prices back down. So you've got an agreement, but you have to reevaluate and revise as needed on a regular basis. It's not do it once and done. Okay, and we had a webinar on engagement letters about a month ago or so. All right, so those of you that need to head out, we really appreciate you joining us. Those of you on the webinar, thank you very much. We had over 500 people attending on the webinar and probably 100 in here, so thank you guys.